Good morning. This is Josh Hayes with Hedge Plus, and here's the market monitor for Thursday, August 7th. I have to be honest, there's not a whole lot of positive things to say right now. I suppose that's often the case when you hit seasonal lows, which we are hopefully either at or near right now. There's not much to point to as far as known aspects of the market right now that point to bullishness. But since the markets are very tough to predict, hopefully that's an indicator that the next unknowns to drop are positives and mark a turnaround. Technical setup right now, it's rare I talk about technical charts, but the technical setup right now does point to a possible reversal from being oversold on the corn market. The December contract, we went below $4 yesterday. It did not hold, and we stuck and we held above $4 to close the day. There's a chance that we can continue to bounce from here. I am not convinced that a low is in, but there is an argument to be made that we don't have to get quite as low as we did last year on this contract, 385. We obviously have better fundamentals. Well, whether people want to admit it or not, I know people are plugging in a really high number for yield. But we are definitely coming from a tighter ending stock situation versus where we were projected at this time last year. So there is hope that we might not continue to drift down, but then there's also an argument to say that while this is around the time of year we hit that low last year, that we might I think the timeline might be a little behind last year given the delays of product coming out of South America. So something to watch there. Demand for U.S. soft red winter wheat remains high. It continues to be the lowest priced wheat on the market, and that kind of extends to corn and soybeans as well. I'll show that here in a minute. But we definitely have a low prices cure low prices type situation here. So that's another reason for some optimism. Unfortunately, on the other side of the equation, we have some very bearish new developments that really, maybe have somewhat accounted for already, but also possible potential that these items are not fully accounted for. The first one being the Chinese crushers are now making internal sales, fourth quarter sales to domestic feed mills there in China. And that really calls into question if they will need any demand from us at all this year, if they will need any to export any soybeans from us at all this year, even if there's perhaps an agreement. It certainly doesn't put them in any rush. But the bigger problem with that is it also means they might not have quite so much demand from Brazil either. And one of the things we were counting on, was that if China kept making massive purchases from Brazil, it would mean less for Brazil to sell to anyone else, and it would send those other countries to us. Thankfully, Brazil's price is still higher than ours. We got to hope that keeps up. They have had some logistical issues dealing with their big crop. They don't have the storage for it. They don't have quite the internal operation we do to get such a massive crop to port and spread around the world. So there is some issue there. But if China's not going to have as much demand towards the end of the year as they have in the past, the trickle down might mean that fewer countries end up coming to us because they are able to still buy from Brazil. Another concerning indicator is that corn used in ethanol production came down, and the primary reason for that is that we've had an increase of the use of sorghum in the production of ethanol. And what it did to the numbers this week was bring the number of corn bushels used in production down well below what the USDA has projected for the year on a weekly basis. So basically, in other words, what we used for corn last week, if that rate were to continue, we would fall short of the USDA projection for the year. We have been running ahead of pace. I hope this is just a blip and we have a bounce back next week. Stocks did come down pretty significantly. So that does point to perhaps we're right now in the midst of a week of heavy use and an uptick in the use of corn for production. We'll see that next week, but that's something to watch for as well. Taking a look at the weather, again, not any areas of concern. In fact, the tiny areas of concern anywhere around the world seem to be getting what they need. And so, even the smallest of issues, the weather seems to be turning in those places. For instance, in India, their southern areas, which were getting very dry and starting to affect their crop, are getting rain. China is getting rain in the needed areas, so their concern is lessening there as well. Do still have dryness in the forecast for France, but that area is not too much of a problem on the global scale. Obviously, here we had some storms in Iowa. We'll see what if there's any aftermath of that. And the southern plains are hot. That is probably the biggest budding issue we have here, but it's in the early stages. And as long as they get rain here in the next few weeks, that shouldn't be too much concern. Taking a look at international prices, you can see we have actually dipped below Argentina for corn, over $1 per metric ton. That's been rare. They've always been a little lower than us. We've caught up to them, and now we do have a lower price than Argentina. That's a hopeful sign that more purchases will continue to come. We've had strong purchases, and these prices are why. And you see the same thing with soybeans. Look at that number compared to Brazil. That's really unreal to see that they're $40 per metric ton higher than us right now. That's not usual. And then, as mentioned before, we have the soft red winter wheat is the lowest price wheat in the world right now. It's been that case for quite a while now and should continue to draw considerable export interest. That's the one thing I think saving us from falling further off a cliff, and hopefully will be an indicator that we turn around soon. Taking a look at overnight prices, corn and wheat up a little bit. Soybeans are flat relative to where we were 48 hours ago, this time Tuesday morning on the last monitor. Corn is down about 1 cent. Soybeans have dropped 13 cents in the last 2 days, and wheat is down about 3 cents. So you can see corn floating at 404 this morning, hovering above that $4 level that we dipped below yesterday. We'd want to hope that holds, but we are obviously positioned well in hedge accounts for the downturn that we've had. So this is something obviously we're going to be watching very closely because what we're looking for is when we're convinced that the bottom is in, that's when we'll exit those positions and get buybacks initiated. So definitely something we're watching closely and could happen at any time. In fact, I do believe we will have a major announcement today, not related to necessarily to buybacks, but to something else related to the market. So stay tuned for that. And that is all for today. We'll have Jason's Feedlot Focus tomorrow, focus on hog and cattle markets. And I will be back with you for a market monitor again next week on Tuesday. Hope everyone has a great finish to their week. Thank you.